Hello traders and welcome back to my YouTube channel. In today's video, I'm going to be showing you a simple day trading strategy that I used on USDJPY last week. Now, not only did I take the trade, but many members in my VIP group also managed to take advantage of the same move. And you can join this group now by clicking the link in the description below. If you're not already subscribed to the channel, make sure you hit that subscribe button so you don't miss any more content. But for now, let's jump straight into the video. Right guys, so jumping straight onto the charts on USDJPY, this is on the 4-hour time frame, and as you can see, price was previously trading within bearish market structure, forming this descending channel which later on led into a falling wedge pattern. Okay, we're constantly forming lower lows and lower highs in the market. However, what I started to realize and started to examine was that the selling momentum was slowing down, and the way I look to see this is by using this tool here called the price range, and I start to just measure out the bearish moves that we are having. Okay, as you can see, this one is 591, and then the next move that we had being here was 504, so we're already decreasing, and then the next move being 470. Okay, so we're seeing that the momentum from sellers is slowing down, which is giving us our first kind of initial information within the market that we might see a reversal. However, this is not confirmed until we see a higher high formed within the market, which we did see where price broke out of this falling wedge pattern, and we saw price form this higher high within the market here. And that was our confirmation that we should begin looking for our buy positions. Now, when we see this happen, once we see that bullish impulsive move to the upside, we like to see price correct to the downside. So this is what I mean. When we see price make that bullish impulsive move, breaking the highs, we like to see that sellers are inactive within the market, and that is shown by a bearish correction. And then what tends to happen is the probability is that we then see that bullish continuation, and we're trying to catch the end of this bearish correction to catch that bullish continuation. Okay, it's this bullish continuation which we're trying to ride to the upside and take advantage of, which we obviously did done. So we're going to jump down to the 1-hour time frame and potentially even lower to see if we can get this bearish correction in a lot more detail. So we are now on the 1-hour time frame. In fact, I'm going to drop down to the 30-minute time frame just so we can get in a little bit more depth of what's happening within this bearish correction which is taking place. So when we're trading the bearish correction, what most people are trying to do is they're trying to catch the very bottom. Okay, they're trying to place their buy position and catch every single low that they can. But as I always say, you don't need to be first into the market to make the most money. Okay, sometimes you can get in all the way down the end and still catch a very nice risk to reward. So just take that into consideration when you're trading. You don't need to be first into the market. It's always better sometimes to wait, get that better confirmation, add more confluences, add more probabilities to your trading, and you can still catch a nice risk to reward. But anyway, as you can see, price is trading to the downside. We're forming these lower lows followed by lower highs, lower lows, lower highs, lower lows. Okay, so price is definitely moving to the downside. So we need to see something take place which is going to tell us that the correction is over, sellers are no longer involved in this market, and that buyers are looking to take over, so we can look to take our positions. So I can visually represent this downtrending market here by drawing in this trend line, and we can potentially connect these low points here within the market. I'm not actually going to draw that bottom one on, but this one is the main one we're focusing on because we need to see price break above the most recent market structure. What else can I see taking place on this time frame? Well, I can also see price forming an inverse head and shoulders pattern. Okay, so this is the first initial signs of that reversal, with this side over here being the left shoulder, this side over here being the right shoulder, and then down here obviously being the head. Okay, so the inverse head and shoulders pattern is a bullish reversal pattern, and it's giving us a sign that this correction is over, and soon we are going to be able to look for our buy positions. Now, when is this confirmed? Well, obviously we've got the inverse head and shoulders pattern, but then we need to also have our neckline, and our neckline would be through here, which you can see we've got an area of sensitivity where price is using it as a support level, using it as a resistance, using it as a resistance, and this is our most recent lower high point within the market, which is then taken out by this strong bullish impulsive move. Okay, so this is our confirmation now that we can indeed start jumping into buy positions. However, I'm going to be fully transparent with you guys. If you look at the hours at the bottom, this is way outside my trading hours. I don't trade normally past around 4 p.m. In the evening, and then I don't start trading until around 8 a.m. in the morning. So as you can see, this is 6 o'clock at night now. I'm not trading. I haven't even seen anything that's going on overnight. I'm obviously asleep, and then I wake up and price has moved to the upside. Now, what most people will be thinking is that they've missed the move. However, I don't take it like that at all. I take it as the fact that price is moving in my direction. We're constantly now making higher highs followed by higher lows. We just need to be jumping on the trend with a calculated, and systematic way, rather than just gambling and getting in out of fear of missing out. Can we jump on this trend, without, gambling essentially? As long as we have our targets in place, which would have been, around this level where this wick was. Now, I don't target the top of the wick. I always like to target a little bit below, which is why I had this level over here at around 145.600. That's where I was looking to, take my profits. So we had plenty of room to be able to get into the market. Now, all I'm doing is looking for the swings. And the way I do that is by jumping down to the 5-minute time frame. So we are looking for price to basically be consistently breaking through levels of resistance and then coming back correctively and retesting it as a level of support. So for example, we missed one earlier where it was here. You can see this is a resistance level, price breaks through it quite impulsively, and then we pull back correctively, retest it as a level of support within the market. This could have been used as an entry as well. However, we missed that. We was asleep at the time, and then price made another strong bullish impulsive move to the upside, breaking through the most recent high point within the market, which would have been this high point over here. We dragged that across, and we want to see price use it as a level of support, which price did. Okay, so now I'm up in the morning, I'm into the office, and I'm waiting to see how I'm going to look to enter this market. What confluences can I add to this piece of analysis to enter the market? So price obviously breaks through, we're retesting it and using it as a support, but I never tend to get in on this when price is correcting on the first levels of support, because I know many other people are also entering buy positions here, and all this is doing is creating liquidity for people that are entering the market here, putting their stop losses just below this low point. I know that those are people are going to be getting stopped out. How many times, for people watching this video, how many times do you get into the market and then price hits your stop loss and then continues going your direction? And unfortunately, you're just the victim of a stop hunt in that scenario. So you need to be more patient. You might need to make your stop losses bigger, or if you do take the hit, don't call it a day. Don't, close your trading account. Perhaps see if you can re-enter the market, as long as you're doing it in a calculated way and not revenge trading, have another crack at the market. But what I've done was I used my Fibonacci retracement tool, and I used it from swing low, from here, drag that across to swing high, and I can see that price was using the 61.8 level. However, once I saw price come in and tap the 78.6, give us a nice rejection, that is when I looked to initiate my trade, putting my stop loss below that low. Okay, that was the first initial trade that I entered within the market. What happened next? Price obviously went straight into profit very nicely. However, then we came to this level of resistance. Okay, this level of resistance, price came into this level, and what did we see? We saw a rejection. Now, what most people would be doing in this scenario is they would be, panicking, thinking to themselves, should I close my trade? What should I do? Should I take profits? Should I take partials? And really getting emotional within the markets. But, you need to remain calm, and you need to know what you're going to do before it happens. So I knew once I entered this trade, once price started to approach this level, I was going to trail my stop loss into break even, protecting my capital just in case price was to reverse from this level. I'm not concerned about closing the position, because I know that there's a potential for price to form this higher low point and then look to potentially continue to the upside. At the end of the day, price is bullish, so the probability of sellers stepping in from this level is very low, and anyone who is selling at this level is most likely going to get stopped out. I know that the confluences stack in favors of buyers, so I knew the probability was for price to continue, which is why I didn't take profits and I just trailed my stop loss. Then I saw price form this higher low point, okay? As we started to see the candles decreasing in momentum and buyers stepping back into the market, I then initiated a scale win position. Okay, so a second trade where I look to enter the market, but I only do so if my first initial trade is at break even. What that allows me to do is to maximize on my profits by adding another position, but also limiting my losses because I've moved this one to break even. This is, still a 1 risk to reward, risk on the table. So I still only have a 1 risk to reward risk, whereas I'm potentially doubling my profits. This is almost a 6 risk to reward. This is a 7. So, you do the math, you're basically doubling your reward on the trade whilst also limiting your risk. That one shot into profit. Now, as soon as we broke through this level of resistance, my plan was to move this trade to break even as well. So that's what happened, okay? This trade was also moved to break even. So now both trades are running completely risk free, okay? So I have no risk on the table right now, and I'm running in very, very good profits. Now, what that means to me is, I still have a potential to enter another position, as if I enter another position and it loses, I'm still potentially in profit. That's what trading is all about, guys. Trading is about maximizing on your winners and also limiting your losses. So when I'm trading, I'm not trying to trade 10 different pairs and trying to find positions on, 10 different pairs. What I'm trying to do is I'm trying to find a really clean trade with really clean market structure, and then trying to maximize on that one move as much as possible by adding to those trades and scaling in on each swing as we break through levels of resistances and stuff like that. Because at the end of the day, as we're breaking through levels of resistances, my trade is just getting stronger and stronger, and the probability of us reaching the target is getting higher and higher. So the trades we're taking aren't gambling. It's not, over risking. They're actually higher calculated trades, higher probabilities. And we're doing so by, just scaling in. So then price came back, used this level of resistance as a level of support, started to see the slowdown in momentum. As you can see, all these candlesticks, they're all doji candlesticks, which are indecision candles within the market. As I then started to see buyers step into the market again, I initiated a third position with my stop losses below, and then price moved to the upside. As price broke through this high, my plan was to trail my stop loss to break even. So as we reach this level, my stop loss on this trade was at break even as well. So I now have 3 trades all running in profit with my stop loss at break even. And then obviously the rest is history. We went to our take profit level. Okay, guys, that is exactly how and why I took the trades I did on USDJPY. Really simple market structure, just maximizing on our winners whilst also minimizing our losses. But anyway, guys, I hope that video helped. That is the end of the video, and we'll go into the outro. Thank you for watching the video, guys. If you enjoyed it, make sure to leave a like and a comment. Let me know your thoughts in the comment section below. We're almost at 10K subscribers, so make sure you hit that subscribe button so you don't miss any more content. Have a great rest of your week, and I'll see you in the next video.